I'd like to welcome you to this opportunity to take a deeper look into UEX Corporation. I'm President and CEO Roger LeMaitre. We'll be talking a little bit about our Christie Lake uranium project, some of our other uranium assets, how we'll be unlocking value through our West Bear Cobalt Nickel prospect, and some of the features that make UEX one of the more compelling and interesting investments in the junior space today. During this presentation, forward-looking statements will be made. Please review the cautionary language here before proceeding. We believe there are four key aspects that make UEX a compelling company and a very interesting investment. First, we're growing resources at our Christie Lake project right next door to McArthur River, and last year's discovery at the Aurora deposit shows that property has great potential. Second is our West Bear Cobalt Nickel prospect, one of the most intriguing cobalt plays in the world today. In January, we announced that we'd be spinning this project out into a new company, and we anticipate this will be a great value to existing UEX shareholders. Third, UEX's value is underpinned by a substantial uranium resource base that will only increase in value as the price of uranium inevitably rises. Finally, one can compare UEX's valuation to our peers in the Athabasca, and you can see, given the cobalt in our resource space, we're relatively undervalued. UEX owns 10 uranium deposits in the Athabasca Basin. We have the West Bear uranium deposit, which is the shallowest undeveloped resource in the basin. We have 49.1% ownership of the Shea Creek deposits that we share with Orano, formerly known as Areva. We own 100% of the Horseshoe and Raven deposits right in the middle of the heart of the eastern Athabasca Basin, conventionally mineable and heap leach amenable. And our current focus of all our work at Christie Lake, where we own 45% and we're on track to earn 75% of the Paul Bay, Ken Pen, and our newly discovered Aurora deposits. And of course, we own the West Bear Cobalt Nickel prospect 100%, one of the more intriguing cobalt plays in North America today. The West Bear Cobalt Nickel prospect was discovered by the company in 2002. In 2004 and 2005, the company completed 13 holes. These holes to find the West Bear Cobalt Nickel prospect over 175 meter strike length, and the deposit today remains open in all directions. Due to the plunge in cobalt prices and the severe rise in uranium prices in late 2005, UEX put the cobalt prospect on the shelf until just recently. COEX Metal Corp is UEX's 100% owned subsidiary and is the vehicle under which we will be doing work in spinning out the West Bear Cobalt project. The Cobalt project is located in Saskatchewan in the eastern Athabasca Basin. In 2016, Saskatchewan was voted #1 mining investment jurisdiction by the Fraser Institute. This part of the Athabasca Basin hosts several uranium mines. You can see that West Bear is right up against operating uranium mines and therefore has a lot of infrastructure nearby. Road and power lines across the property. This part of Saskatchewan is very mining friendly with a long history of mining and exploration. This chart summarizes the key reasons why UEX has decided to restart the West Bear Cobalt Nickel prospect and why we think it has great value for shareholders. Even the most pessimistic analysts see a significant supply deficit coming. In fact, 40% growth in cobalt demand is needed to meet this supply deficit. 98% of all cobalt mined today comes from either a byproduct of copper or nickel mining, and therefore is not responsive to changes in the cobalt pricing market or cobalt supply market. In addition, 65% of all cobalt today is mined in the DRC. There's a real demand for ethically sourced and stable supplies of cobalt to power that growth in electrical vehicle demand that we're seeing today. We feel the West Bear Cobalt Nickel prospect is ideally suited to help fill some of this need. In November, UEX embarked on the process of trying to figure out what the best way to extract value for shareholders was with the West Bear Cobalt Nickel prospect. In January, we announced that we would be moving forward with the spin-out of COEX as a new company, and it's our goal to have that spin-out completed in late August and early September. With that in mind, we have 4 key objectives to achieve for the spin-out. 2 for our shareholders and 2 for the prospect. For shareholders, we want to execute that plan of the spin-out and then turn UEX's focus back towards uranium resource growth at Christie Lake. For the prospect, we want to do our first program there to find mineralization in the primary area and then look to expand resources in the second and third priority exploration target areas immediately nearby, and try to complete a first maiden cobalt nickel resource by the third quarter. What makes West Bear compelling and unique is its grade. It's one of the highest grade deposits known today. And you can see here grades have been intersected in UEX's drilling program up to 10% cobalt and 3% nickel, which is truly exceptional. If you were to average the grade from that previous table, those holes would average 1% cobalt, which puts West Bear in a pretty unique position. Only the Bu Azzer mine in Morocco, the only primary cobalt mine in the world, producing 2% of the world's output, has a grade even close to that we see at West Bear. One of the key needs for the cobalt supply to be stable are mines that have cobalt as the driving force behind all the economic decisions. Once again, if you look at West Bear sits very favorably in terms of its value in situ in the ground. The gray lines here show the value of all the metals in the deposits if you were to multiply them by today's price. And yes, West Bear compares favorably, but more importantly, West Bear looks really good compared to a lot of the other potential operations and current operations out there when you consider that cobalt makes up the vast majority of that in situ value, as you see in blue. Cobalt will be making all of the economic decisions should West Bear move forward. This is a geological map of the West Bear area. You can see in highlighted in pink in the area number 1, that's the West Bear Cobalt Nickel prospect. It's been defined over a strike length of 175 meters. It's got a horizontal distance of 75 meters. It starts at about 13 meters depth and goes to at least 55 meters depth, and quite frankly, it's open in all directions. Dipping at about 20 to 25 degrees to the south, the West Bear Cobalt Nickel prospect is certainly open pit amenable. It's certainly wide open for expansion. You can see in the bottom right corner, some of the highest grade holes are right on the edge of that zone. We can also see in pink and green areas where historical work by Gulf Minerals identified anomalous cobalt and nickel concentrations, but they were never properly sampled for composite mineralization. We also like areas 2 and 3 where we see great potential from the historical work that wasn't properly sampled. You'll notice a number of holes. Beware, the looks can be deceiving. Looking at a cross-section of the West Bear Cobalt Nickel prospect, it's very obvious that mineralization's focus at the bottom of that gray unit, a strongly altered, very strongly graphitic peletic package and a very strongly faulted structure. You can see that historical drilling in those vertical holes by Gulf Minerals in the past failed to test the fault structure that hosts the cobalt nickel mineralization. And in those rare cases where it actually did, they did not assay for cobalt and rarely sampled for nickel. While there are a lot of holes in that map in the previous slide, it's pretty clear that most of them didn't hit the target. And finally, cobalt mineralization is very difficult to identify in the West Bear area, even when one's looking for it. We now see examples in historical work where rocks that look just like those that host the cobalt mineralization at West Bear were logged but never sampled. Moving on from cobalt, we shift our focus back towards UEX's core assets in uranium. While UEX is blessed with 16 uranium projects and 10 uranium deposits, our focus in the last couple of years has been on our recent acquisition of the Christie Lake property. We like Christie Lake because its location. It's on the eastern high-grade corridor that goes between Phoenix, through MacArthur, Cigar, and into Rough Rider. We are the only junior company to have a piece of that high-grade corridor between Cigar and MacArthur. We're also 9 kilometers on strike from MacArthur River mine itself. That purple line on the left is the P2 fault corridor, the host of all the uranium mineralization at MacArthur. It strikes onto the Christie Lake property, steps across to the red area there where we have our 3 known deposits on the Yellow Acre Trend: Paul Bay, Ken Pen, and Aurora. This is an aerial shot of the north end of the property along the Yellow Acre Trend. You can see the front Paul Bay, Ken Pen, and the Aurora zones. In yellow is the area that was drilled in 2016. All of our work in 2017 focused on the Aurora zone. You can see to the north of Aurora there's sniffs of mineralization that have yet to be followed up. We'll be following targets this winter on that little east end lake, looking for Aurora analogs. You can see we haven't tested the basement potential to the right of those mineralized showings, which was the key reason why we picked up the property in the first place. We continue to work at Christie in 2018. This winter, we've embarked on a 9-hole, $1.5 million program to test areas for Aurora analogs northeast along the Yellow Acre Trend from Aurora. We will be coming back later in the winter to test the Aurora deposit itself, which is open in both to the northeast and to the south. While our focus has been exclusively on the Yellowega trend to date, the rest of the property is pretty prospective as well. There are segments of the P2 fault west of where we drilled at Yellowega that have mineralization that have yet to be tested in a similar manner to what we've done to make discoveries at Aurora all on the Yellowega trend. The area in green on the south end of the property has several conductors that are prospective but have yet to see a drill hole. Conductors in the eastern Athabasca Basin at 350 to 4 meter depth that are undrill tested is pretty unheard of. While we're entering our third winter program at Christie Lake this year, we're still in the early days of exploring this very prospective property. You can see here in this chart the vertical scale is the total number of meters drilled to get to that first maiden resource. The size of the bubble is the amount of money that's been spent. And you can see that we're still really early. We have a lot of drilling to do to catch up to what some of our peers have done recently. Below the bubbles are each company's market capitalization per pound of resource they have. And you can see we're severely undervalued compared to our peers, even though it's early days. Our market cap per pound includes the value of the West Bear Cobalt Nickel project, but no pounds contributed at all from Christie Lake because we're yet to put that into a 43-101 compliance. You can see that UEX creates an interesting value for shareholders. Underpinning the company's value is our uranium resource base. You can see we have about 86.4 million pounds of uranium split between Shea Creek, Horseshoe Raven, and West Bear. We've yet to put 43-101 resources on our Christie Lake project, and we're working hard to do that now. With uranium prices currently between $20 and $23, it's unrealistic for us to expect to develop these resources today. We do believe that these resources will become increasingly valuable as uranium prices are going to be forced to rise to meet supplier costs. When every single supplier in the world is losing money, prices will have to rise to incentivize new projects to meet the growing demand for uranium. We believe UEX shareholders will see significant value from this price appreciation. With all these things, we believe UEX is one of the more interesting junior uranium explorers and developers. We have opportunity to grow resources through our Christie Lake property. We have potential value for shareholders through our West Bear Cobalt Nickel spinout in a rapidly demanding, growing cobalt nickel market. We're underpinned by substantial resources, and we're relatively undervalued compared to our peers on any metric. With just under $10 million in the bank at the end of February and a market cap of $90 million, UEX is well positioned to execute its programs at Christie Lake and to do the spin-out at West Bear without the need of raising additional cash. We were really excited to have the opportunity in the last couple of weeks at the PDAC to speak to a lot of the shareholders of our company and talk to them about what we were planning to do. But if this video didn't help answer some of your questions, please feel free to contact us at the address above. We're looking forward to reporting back to shareholders what we're able to accomplish in the coming months. Thank you.